Hello, everyone. Welcome back to another episode. My name is Jordan, the Millennial Investor, and today we have a company that we're going to go over. You may have heard of it. It may be one that you all know. It's a household name, and it just so happens to be my largest investment, which is Amazon. And so today we're going to go over this company. It's marked the number one largest holding in the growth portfolio, and we're going to go over this company, why it started to recover, why I think it's going to be an excellent investment in the future, and why I currently own 200 shares of this company. That's right, 37.6% of this company is in my invested net worth, and it, not to mention actually just in general, I believe it makes over like 20% of my total net worth in general. So we're going to go over Amazon and why I think this company is going to be a powerhouse moving forward into 2022 and beyond. If you've not seen me before, my name is Jordan. I'm a millennial investor, and I have lots of available services for you guys who are interested in signing up for things like mentoring sessions for just $50 an hour. You can reach out to me and help get started with investing in growth stocks, dividend stocks, troubleshooting in your portfolio, or signing up for M1 Finance, or just basically anything you want to talk about in the market. So you can reach out to me there, as well as lots of other things, including auto savings accounts, credit card referrals, and all that good stuff. But as usual, I show my holdings, I show my history of my portfolio, as well as my performance year to date, which we're still slightly lagging the market based off of the monthly reporting that I get from Fidelity. And Amazon, I saw this article, and I will say that it is quite old, so stay with me here. It is about a year old, but I think it still holds true to why Amazon is going to be an incredible company. So we're going to go over this article, some parts that I highlighted from it, as well as looking some little tidbits here about Amazon.com. And then we're going to go over some different segments, including AWS and its advertising business and subscriptions and all that good stuff, as well as another bullish catalyst that is happening right now. So thank you guys for tuning in, and let's go ahead and get started with Amazon. So like I said, Amazon is currently my largest holding. It has been for several months now, I believe 4 or 5 months now, and I expect it to remain that way, likely all through 2022, maybe even into 2023. But this company has many different business segments, and you can see those here. It divides its revenue into these different categories. Online stores, and let's go ahead and look at the quarter over quarter revenue charts for these. Online stores, physical stores, third-party seller services, subscription services, AWS, and other revenue. Now, for me personally, the main thing that I'm focused on is AWS. But there are three categories, three of these six, that I'm particularly focused on, which is AWS, subscription services, and third-party seller services. As long as these three are continually growing, that's mostly what I'm focusing on. And more importantly of all, I mostly want AWS over all these to be growing the most steadily. Now, if we go over here, you see that I have little tabs down here. And down here at the bottom, we have Amazon. And this is my notes. This is what I look at when I'm running numbers and what I'm basing things off of for Amazon. And these are all real, accurate numbers. And these are estimates as we get to the bottom here that I project out for Amazon. Now, here's what I started doing, is that I started making bear, mid, and bull cases for companies, and helps me get a better idea for valuation for where I think they're going in the future, right? And so what I do is I start running conservative estimates, and I say, okay, if this company, I'm not sure why this needs to be dragged out. There we go. If this company, if I have conservative estimates on it, and even the conservative estimates make it look bullish, make it look cheap over the next several years, then that is likely a good company to be investing in. Furthermore, this is just the quantitative, the number side of things. Qualitatively, is it a company I like? Is it a company I believe in? And so based on me, what I've been doing is I've been taking the bull case as what I believe is their actual numbers. These are my actual estimates right here. I think that North America will grow at this rate, international at this rate, AWS, these margins, yada, yada, right? So if these are my bull estimates, really being my average, and the company looks cheap, based off of these estimates for me, if this company was to grow at this rate and produce these amount of profits, it would have an 18.02 PE ratio based off where I need the company to be in stock price in 2026. Now, where's this number that I'm getting? This number for 2022, 23, 24, 25, 26? Well, it's based off of my portfolio tracker, and it's looking at where I need my portfolio to be to hit my $1 million goal. Those of you that have been following me for a long time, I have a $1 million goal based off of my 40th birthday, which is right here, February 5th, 2039. And when I look at this and I see that Amazon only needs to be at an 18 PE ratio to be at, $190 in 2026, I think that is very bullish. So if we go ahead and look at these numbers, we can look at a lot of historical data, including operating profit, operating margin, the quarterly revenue growth, the annual revenue growth, and it's each divided by total company numbers and by segment. Now, something that's interesting here is that I think my revenue estimates are pretty conservative. If you run them at just, let's see, 10% in North America, 12% in international, and 28% AWS growth, which lately they have all been beating those. So this assumes even some revenue slowdowns. With the exception of 2022 being in the recession, these have finally started to slow, but I think they'll be able to maintain that moving forward. And this is how I get to these numbers for 2022 to 2026. And so if you want to see any of these numbers, and if you want to pause it, these are also the notes that I have for it. If you want to pause the video at any point right now, because if you want to see these numbers and compare them against your own, you're welcome to do so, and this is how I get to my estimates for Amazon. Now, I found this article. Now, it's about a year old, but I think it's still applicable. I think it's still very accurate for where Amazon's today, even though this article is about a year old. We believe Amazon's retail business has a wide moat stemming from several areas. Network effects associated with its marketplace, where more buyers and sellers continually attract more buyers and sellers, so almost like a flywheel effect. Cost advantages tied to purchasing power, logistics, vertical integration, and negative cash conversion cycle. Intangible assets when associated with technology and branding. We believe that AWS is also a wide moat business thanks to the following: high customer switching cost advantages associated with economies of scale, intangible assets arising from semiconductor and facility development, and then a network effect, much like what we spoke about with its marketplace. The same network effects are present with AWS. Furthermore, Morningstar also says that its advertising business is a hidden gem. And I wanted to highlight this real quick. If you look at a company like, let's say Facebook, you're scrolling through Facebook, you have feeds, it has data on what you like, what you dislike, and that's important, but you're not directly looking for a product. So let's say that you were really interested in men's t-shirts, right? So let's search that on Amazon. If I search men's t-shirts, right here, right through the search results, let's see, the first three is going to be an Amazon Basic right here. And then next two are going to be sponsored. So right here, somebody, this company and this company, just paid Amazon to put these here. That's why it says sponsored right here. And if I click on this, they also just paid Amazon money for me to click on that because they advertised their product on Amazon.com. Right here, this is how Amazon is making a fortune off of its advertising business, as well as there's other advertising businesses that it's had, but this is the bulk of their revenue from that. And think about how profitable this is. This is very similar with something like Google. If we were to search men's t-shirts, right, you see ads right here. And we know Google is one of the most profitable advertising businesses in the world. I think it's very similar for something like Amazon.com, and both of these businesses are growing. And if we look at their online stores, if we take away AWS and we look at online and third-party seller services, you can see slow and steady, consistent growth. Right? If we look at this over a longer scale, if we look at their overall revenue on a quarterly basis, the massive scalability of this company, it's crazy. It's hard to even put into words how much revenue this company is actually producing, right? And then going lastly, the last thing I wanted to highlight in this Morningstar article was we foresee Amazon Web Services, AWS, advertising and subscriptions growing faster than the company's e-commerce business over the next decade. I would 100% agree with that. I think that those three categories, which are basically the three that I talked about, are going to grow much faster. I believe between those three, they're probably going to likely be growing, the three of them likely maybe 15%, the three of them combined, if I had to guess, over the next decade, at least 10%. Further, each of these segments drives higher margins than the corporate average, which should allow both operating profit and earnings per share to outgrow revenue as margins continue to expand. Amazon is the clear leader in public cloud through AWS, which we believe is still in the early stages of mass adoption in a market that should ultimately be near $1 trillion. Its advertising business is already large and continues to scale, offering an attractive option for marketers looking to access a vast audience with a variety of proprietary data points about these consumers. Now, you can believe what you want about AWS, and you can believe what you want about the company. And the negatives of this company that I often see people say is that its online stores, it's slowing growth. You see that the company is really not making any profits whatsoever. Because we hop back over to these profitability numbers here. Let's look at the operating profit for its North America region. Lately, it's been negative, losing money. And even the years that it makes money, it's normally very low margin. I think the highest number here, let's see, back in 2019, 6% profit margins. Not bad, but nothing crazy. And then if we look at international, almost all consistently unprofitable. We had one big profitable quarter of a hot 4% margin with $1 billion, but basically this section loses money every year. And then there's one highlight. Look at the consistent growth in profits every year for AWS, from $2 billion to $3 billion a quarter, $4 billion a quarter, $5 billion a quarter, and now we're reaching upwards of $6 billion a quarter. And furthermore, not only is the company growing the revenue for AWS, which is, once again, this is the revenue chart for AWS hitting record after record after record revenue every single quarter, the profitability, the margins are expanding as well. Back in 2019, let's see the average of these. Let's see, the average for 2019, the average is 26%. For 2020, the average is 29%. For 2021, the average is 29.8%. And then so far throughout the first 2 quarters of 2022, the average is 32% margins. So I project that by 2026, they'll have 34% margin, which would only be a 2% increase between now and the next 4 years or so. So I think that this company is growing massively. I think that we'll get to a point just in a couple years where this company is doing tens of billions of dollars in operating profit just from AWS. According to my estimates, I think the operating profit in 2026 from AWS is this number right here, producing $213 billion in revenue and $72 billion a year in total operating profit. Right now, already, it's doing last year in 2021, $18.5 billion, and it's well on track to be that. Right now, if you just were to add these numbers up and just multiply them times 2, you would already be at about 25 billion or so, which is pretty considerably higher than last year's. But long story short, I think that Amazon is a great company. Lately in share price, you've started to see a recovery. In the last 1 month, it's up 27%. 27.35%, and this company has over 10 billion shares outstanding. So if you were to take this number of $30 plus, going up $30 in the last month, and multiply that times its time by its shares outstanding, this company has went up $300 billion in market cap in the last month. And I believe that's mostly due to 2 reasons. One, AWS. AWS has continued to beat analyst estimates, now coming at $19.739 billion in the last quarter. And then lately, you have a peak in oil prices. When did Amazon bottom out? Its bottom so far this year was around May, June or so of this year, right around this area. Now, when did oil top out, get at its peak? Right around May, June of this year, and now you have oil falling through the floor, when it was originally at $120 during this low period right here at about $100 a share. Not Amazon, crude oil has went from $120 a barrel to now today is trading at $88. So this is really beneficial for many people, for all consumers, but what it really benefits is a company like Amazon, because obviously they use more fuel probably than any other company on earth, and so this is really going to help out their Q3 profits, and hopefully over the next year, 2 years, if we can get crude oil down significantly, if we can get crude oil back down to 80, to 75, to 70, maybe even, who knows, maybe even down below to 60 or 50, that would be wonderful for Amazon. I would really be bullish on this company even more if we could get back down to, say, around the $75, $70, $65 range, right around here. So that would really be great for this company like Amazon. But regardless, it's all noise, because at the end of the day, I don't really care too much around what happens with their online stores. I want them to grow it. That's great. But what I really look for are these 3. Third-party seller services, subscriptions, and AWS, because they are the 3 that is most important, most consistent, and most importantly, the most profitable. Thank you guys so much for watching. If you appreciate this content, if you enjoy watching my videos, feel free to sign up for M1 Finance, or even schedule a mentoring session if that's something that you're interested in. We have lots of other products as well, including Got a Savings Account, swag bucks, credit card referrals, lots of stuff. But thank you guys so much for watching, and I'll catch you guys in the next video.